The market pulled back to those key levels we discussed in yesterday's video. If you're new here, welcome to the channel. We're going to talk about what's on the horizon for tomorrow's trading session and to finish out kind of a summary of how this week panned out. Our relative strong stocks and also the relative weak stocks that are pulling back a little bit, which most people are like, what's going on with our semiconductors? What's going on with NVDA, AMD? Do they have lower? What's going on with PLTR? We'll discuss all these today so you're prepared on the outlook for next week. Okay, we have a lot of data that's going to be coming out that's going to be dependent on is this a real rising push to start off 2026, or is it just kind of a grind higher liquidity grab? News data comes in and we pull back drastically. All right, so thank y'all so much for being here. If you've been here before, you already know how we do. My name is Dr. B. If you haven't, check the links down below where you can join Leverage University, which is our live trading room, our educational platforms. We have a welcome course for free down below. Join the newsletter for that so you can learn more about us. Message our support team as well. No strings attached, no nothing. Take your time. But if you are struggling a little bit and you feel like you're alone in this journey, please consider our community if you want to. If you do need one-on-one support, we do have our mentorship as well, our 6-week program, one-on-one with myself, along with 1 year inside of Leverage University. All right. So without further ado, let's jump into it today. See why the market pulled back as we talked about, and then what's on the horizon for tomorrow. Okay. So the non-farm payrolls report, for those that don't know, NFP, will be released tomorrow at 8:30 Eastern Standard Time. Okay, so before the market opens, we will get some type of reaction. So if you watch the market an hour before, you will see either typically a pop down really quick or a rise higher, whatever it may be. We need to kind of read into the report to see if that's really positive or is it a fake out. All right. Released monthly by the U.S. Bureau of Labor Statistics, provides key insights into U.S. employment trends, excluding farm workers, government employees, and few other categories. All right. You can screenshot this if you'd like. General impacts on the market, positive effects. Now, a strong non-farm payrolls report, meaning a higher than expected job growth, lower unemployment, and faster wage increases. Okay, that's what the strong NFP report means. Our labor market is good. The positive effects, it signals a robust economy, right? Everything's good. People are kind of getting back to the job market. There's a no firing, no hiring type of situation going on. It typically strengthens the US dollar, imply volatility, and can support a soft landing narrative. Now, negative effects can pressure stock markets if it reduces expectations for rate cuts. So I want to pause right there. If we have a strong labor report / NFP report, right, that's usually a good thing, right? But that also signals that the Fed might not cut rates as aggressively on their next Fed meeting. Okay. So the market, if it pumps, right, and I'm using kind of examples, if then that. So if the market pumps in the morning with a positive labor report, it could say, hey, great news, awesome job, and then potentially pull back and sell off. All right. So be mindful of that a positive report could signal a pullback because people are like, hey, they might not cut rates because the report was so good. All right. Positive reports, here's an example, provide a catalyst for equity markets and higher bond yields. Weak NFP, lower than expected job growth, higher unemployment, and lower wage increases. Positive effects, often bullish for stocks and risk assets. So it's kind of the opposite. If we have a weak labor market, meaning people are not able to, they're filing for more unemployment, it's a slower growth economy, that's where the Fed will typically cut rates to stimulate consumers to go out and borrow money, spend a little bit more money, because they're like, hey, we understand what's going on. We need to cut rates, stimulate the economy back in. But if everything's good to go, then we may sit tight. We don't have to do anything. So for those of you that have never kind of walked through what a non-farm payrolls report is, what that is, if you want to screenshot this, look at it, pause it, whatever it might be. Okay. There you go. Okay. So that being said, we take that into consideration first thing in the morning. So what I'll do inside of my group is I will typically read into the report, watch the reaction on the charts, which I'll show you in just a second, mark my levels, and see how they react off of those zones. If it pops into a zone higher, does it continue through it to go higher, or does it pop and then fade off, right? If it drops really quickly into a support zone, it could bounce and go higher, all right? There's a lot of volatility as well for the overall market. So let's jump into the SPY here and give an analysis of this weekly candle. All right. So this weekly candle, as I discussed yesterday, okay, if you paid attention to yesterday's video, you either won, right? You were prepared and you were not shocked with the little pullback and down day that we had today. Okay. Now look at this weekly candle that we have here on SPY. Do you see that it has closed back below that 690 and it's struggling like right at it? Okay. So what this is telling me here is that the market is essentially consolidating, trying to decide, hey, let's just see what the report does. If it's good, we can spur back to highs and we're back off to the races to take out new all-time highs. Okay. If there's a good reaction to the overall sentiment. If there's a poor reaction, then this is going to play out, which is a top wick, okay? Profit taking at the highs. We fell back underneath the 687.50, okay? And really the weekly lows would be more so where you get the sell-off. Turn this whole candle into a red candle, so it would flip completely and turn into a red candle, and then we start selling off back into 683, okay? So that's how we essentially get that gap fill or some type of reaction. Now, what gap fill are you talking about? This one right here that's highlighted. All right. So if I mark this high here at 691, now I know people are looking at 690, but I would suggest more so putting it up to around 691 because you can see that reaction right there and maybe even give it up into 692, but I would say more 691. So do you see this zone? If I mark it here, that zone right there is kind of a sit and wait zone, right? Or traders will call it a no trade zone, an NTZ, meaning we need to wait to see, does it break back above this level to go higher? Or does it push into it and reject and come all the way back down to the lows? Or do we get one of these and it fails and we come underneath the lows? Okay. Either way, we'll have a big reaction one way or the other. But you can see here, it's just kind of waiting. All right. Kind of waiting. Now, if I were to give maybe my sentiment slash Brian, what do you think is a little bit more the majority favored? I personally believe that just based off, if I were to know nothing about the reports, anything, I would say more so this is a break underneath a retest right here and then struggle and then start to fade and then come down there. Whether it happens tomorrow or it happens next week, we've got CPI data next week, right, on Tuesday and Wednesday, or Wednesday and Thursday, one of them. But CPI, Consumer Price Index, and PPI, Producer Price Index, are also major data reports where people might profit take before that big data, because holding your profits up here into major news where you have no idea what's going to happen sometimes can be risky. So what you'll see is it'll pull back. We'll try to see if the news is positive, and then we reclaim and go higher. If it's negative, we've seen the overshoot down. It gets underneath that 686, and then we bam, back down into 680. Okay. So mark your charts like that. If you can see that, you see that little, if you look at it there, I would see that channel there. And then you can see under here would be kind of this channel here. Okay. Let me change the color of it slightly just so you can see the difference. Okay. See how it's sitting up here right now, how it's holding that channel. And this down here, if it gets underneath that 686, that's where you have the potential to go down into these lower levels, 683 and 680. Okay. So if that helps you visually, staying in this box, NTZ, break above 692, then we can go higher into 695 and retest the highs. All right. QQQ. Let's look at it. QQQ left like apologize. It left an unfilled gap back to the upside here at 623. So if the news is positive and we get a spike in the morning like that, okay, that's still back up into a heavy resistance zone right here. Okay. Do you see where we broke down underneath? I talked about this in yesterday's video, right? Look what happens left when we get underneath that 624. Okay. And ultimately this 623, we can fall back down to this 618. What happened today? Got underneath there, gap down slightly, fell right into 618. Okay. So one of two things could happen. We could pop higher back into it to try to retest it, but still form a lower high and come lower. Or this could be bearish consolidation down here. Okay. And we're still underneath that 621 right here. Just look left. I know there's a lot of lines going on, so let me get rid of all this stuff so you can see clearly. Okay. Look left and look at the reaction. So sometimes there's multiple levels, and I'm talking more so to my beginners or people that are just simply learning. I don't like the word beginner, but people are learning and trying to understand this more so. Look left and see where the big zone first reacted right here. That already happened. We got underneath this one. Okay. Now I know it's a little bit wiki slash, well, which word do you draw it? Right here, right here. Right, try to connect the dots as much as possible. So if I draw it all the way up there, maybe I can draw like a little zone right here, right? Which would be kind of in the 622 area, which would be kind of right there. So if that turns into like a little bear flag and we get a measured move is we measure this leg, move it over, and you get that leg right there, okay? Measure the leg down into the consolidation. And then if we get some type of measured move, that would take it right down into that gap underneath there. All right. So got to give it a little bit more space on volatile days, meaning it could stop right here, or it could go all the way back up to 623, right? Go all the way back up to 625, and then form a lower high and still rotate. All right. IWM just absolutely just beastly here. At some point, it will find a little bit of resistance / profit taking. Tomorrow, IWM will probably react very aggressively one way or the other, because small cap companies, meaning the Russell 2000 or the small cap companies, need rate cuts. So I was telling my group today, I was like, IWM could be a sleeper if the market decides to pull back and the data is not in favor of, aggressive rate cuts. Remember the opposite. So if we have a strong labor report, right, that's not necessarily the best for stocks because we might not have as aggressive rate cuts, which everyone wants rate cuts, right? So that would pull IWM back pretty heavily because they're like, well, dang, the report was good. I guess we're not going to get many rate cuts, right? But if the report is so-so and IWM continues higher, then we can continue grinding into that psychological level of 260, okay? So keep your eye on IWM tomorrow. I think it could be really nice. I'll give you a little hint here. Next week, 16th, look how much open interest is on the put side of IWM. Okay, if you don't know what that means, okay, open interest, amount of contracts or interest on that particular contract. Okay, all you need to know is it gives kind of an idea of how many individuals. So I use it as a tool. I don't say, oh man, there's the most 242 puts, so I'm going to enter 242 puts. No, that's not how that works. You do your normal analysis, but if I see a higher put to call ratio, and I look on the call side and I'm like, there's some higher numbers over here, but there's a little bit more hedging / put side over here on IWM. What do they know that we don't know? All right. So this is either hedging, right, just in case there's a drop, or it's, hey, I see what you're seeing, Dr. B. Right? I see what you're seeing. I see a little gap down here. I see that it's a little bit overextended. I see that it needs a pullback at some point. It's a little bit overextended from the moving average stack, which is right here at 252, and then the daily 50. The further it gets away from those moving averages, right, it wants to come back and retest them. Look here. The further it gets away from that moving average, it eventually comes back and retests them. Okay, the further it gets away, comes back and retests them. Look where it took off. Retest, right? So that area right there is of high interest, which is right around that 248 and 247. Okay, and if you want to just round it into 250, okay, this whole area right here would be an ideal pullback retest area. Okay, semiconductors. Okay. I'm going to go into the relative weak stocks, okay? WEAK, weak, all right? NVIDIA, why did NVIDIA pull back? Why did semiconductors sell off today or pull back? Is because there's news with China and can they have chips or can we import chips? That discussion is still going on, right? So NVIDIA was looking more bullish consolidation. I was telling my group, I'm like, we were killing NVIDIA, shorting the pops, shorting the pops, shorting the pops. And then I said today, I just need to wait on NVIDIA. I want to keep shorting the pops, but it's not really continuing. And today was the day. Okay. So as long as NVIDIA is underneath that 186, okay, 186, it can continue down through that gap fill potentially. But again, look at the daily moving average. It's sitting right on the daily 20. Okay. But guess what? It failed that daily 50. Okay. So if you're learning from the videos, those daily moving average, meaning that I'm on a daily chart, I've got my moving averages set to 20, 50, 100, and 200. That signals strength and or weakness. If it fails one moving average, it can come down to the next one. If it fails that one, daily 20 and daily 100, I mean, there's nothing but room down into the mid 170s. Okay. Let's look at AMD. Look at that moving average stack right there underneath the daily 50, right? It gets underneath the daily 20, and then it's sitting right on the 100. It fails that 100, I mean, meaning we get a daily close or an hourly close, something underneath that looks like this on a higher time frame. I mean, look out below 200. That might be coming in. Okay, that might be coming in. All right, and we got earnings coming up. Could earnings fill this gap? Who knows? We shall see. But AMD definitely weak for sure, along with the semiconductor sector in general. Let's look at Broadcom. Okay, another relative weak stock, right? Underneath all the moving average stacks here. Okay. Now, why are you mentioning these, Dr. B? Is because I like to trade off of moving averages a lot. Okay. So if it is at a moving average and reacting accordingly, meaning it's failing it or it's holding it, right? And it's close to it and I see it building off of it one way or the other, right? So I see this rejecting. I'm like, okay, rejecting. Okay. Well, I like that for puts a little bit more because I can see it going down to here and then ultimately back down to here, right? Just trading off the moving averages based off weakness. Okay. So if it's below the moving averages, okay, especially all three right here, and more specifically, if it gets below the daily 200, that's share buying opportunity. That's more, hey, we need to, figure out what's going on here. Okay. I'll show you one, for example, Microsoft barely hanging on by a thread on this daily 200. Okay. So Microsoft is a very good level, but we also have to pay attention that if it fails that daily 200, gets underneath that 464, right? Look out below. We got a lot of gaps to the downside, like we talked about right there. And Microsoft is going lower. Okay. So it's a really good level right now. Take of interest. But again, how is it reacting around these? Does this show strength? Not really right now, right? It's popping and then fading and then popping and then fading. It's not really showing a lot of break of strength. So we got to get a break back above that 493. All right. Google, look at this difference. That's strength on Google, but it's right up into the previous all-time high. So it's building strength on Google with positive news. So Google is strong, right? Amazon above all of the moving average stacks right here, but eventually Amazon is going to have to pull back or should pull back and start retesting these moving averages again. Look how far it got away this time and then rotated right back down to the moving averages. How far it got away from the daily 20, rotated back down. How far it got away, rotated back down. Okay. So there's not a rhyme or reason how far it's going. Just know that the further it gets away, right, it's a little bit tougher to actually trade unless you're just trade momentum and not risk to reward, meaning, okay, I'll just get into calls. But at some point I got to be mindful that I got to have my stop losses set if I'm in calls, because that's a possibility out of nowhere. Okay. Because first of all, profit taking back up into this 250 area. Second of all, it has not had a firm retest. It's just been straight up for 1, 2, 3, 4, a whole week, right? And it can do that. That's fine. But it's got to cool off, or it's got to have a pullback week at some point. All right. Let's go into Palantir, and I'll start rounding out here. If I look at that weekly candle, does that look strong to you on Palantir? very heavy top wick there. So if you have questions about Palantir, which a lot of people do, like what's going on Palantir? When's it going back to 200 plus, right? That's not a very strong push off of there. It tried, but it tried right up into 187. Look left. So if you're on a shorter time frame and you see all this, man, Palantir's back. It's just pushing right back up into a level. And it's got to try to build some strength. So as long as Palantir holds, right, these upward trends right there, right there, right there, and if it can hold this somehow and start just like sitting right here and start building again, then yeah, you can get your push. Okay, maybe earnings does it. Okay, it's got earnings coming up in, I think, a month or a couple of weeks, something like that. Okay, so maybe earnings is that thing. But again, if I look at Palantir, it's first of all profit taking / messy / consolidating for, however long here, right, in this channel. If you look at that, 187 back down to 170, 187, 190 back down to 170. Okay, so it's consolidating here, very similar to Amazon kind of a situation, ready for takeoff, but got to get above the moving average stacks. Okay, got to get above these moving average stacks. You can see how it rejected, right? And I'll show you our watch list today. It was just, gosh, every one of these plays I called out. AMD rejecting off 212 off open. Called out Palantir rejecting 185 off open. Google called that. That was 170 plus 4%. I think 200% it went. I think it went almost 1,000%. This move right here off open, puts right off open. Dropped from 330 back down to 320. That's my gap fill strategy right there. I already knew it was going to be gapped up because it was higher than the close. So it was opening at 329. Yesterday's close was at 321. It was a massive gap right here, right? And it filled it instantly. So you're talking about 200% on your money in 5 minutes. Just, Brian, did you catch it? I literally was, comment down below if you're in our live trading, okay? Literally I was like, load your Google puts. I'm getting ready to click in, and literally the market opens, whoop, right down. I'm like, okay, all right, cool. Anyways, let me see any other final things here. Hood, just honorable mention here. No strength yet on Hood, and I will mention Apple as well. No strength just yet, but it is just sitting in here. So maybe we'll watch it again. As much as you want to time the bottom, maybe pick up shares if you like, but as much as you want to time the bottom, it's in a support, but it's also below the moving averages. So that's the tough thing. I think the moving averages really do help because they give you kind of that wave effect. If it's above and the wave is lifting it up, okay? If it's slightly below, it's pressing down on the stock. So you can see right here, there's a cross. It's pressing down the stock, those moving averages are pressing down on the stock right now. And it may want to retreat back down to 100 and ultimately back down to the daily 200. So I more so look at maybe this being a better risk to reward, right? As much as we want to time it, just clear everything. If we can get something like this, right, that would be potentially a lot better for a rotation back up, okay? Unless we have some big overshoot and it gets back above 127, gets back above the daily 20, 120, and we start building. Okay. All right. I don't know if I mentioned Apple yet. Okay. So a lot of questions around Apple. When is it time to Apple's about to rip? It is in support, right? It is off the highs almost, 12%, right? That's correction territory, right? So you see this recovery right here. That is, a potential recovery. But again, any pop on Apple could be just another fade. So I would say that it's due for a recovery, right? It could recover all the way back up to 265, but we've got to watch again. So if you want to trade Apple back to the upside or pick up shares, whatever you decide, not financial advice, right? Need to watch this underbelly here, okay? That neckline from the head and shoulders, all right? So if you don't know what I'm talking about, I have new people all the time. This head and shoulders right here is a bearish pattern, okay? Left shoulder, head, right shoulder, acceleration to the downside. So what will happen a lot of times is you will get a retest, a big squeeze retest back up to the neckline, right? And you can take that trade back up, right? It is definitely oversold on the RSI, on a 2-hour, on a 4-hour, and on a daily, right? The MACD hasn't crossed yet on a daily up. It's starting to curl a little bit on a 4-hour and hourly curling. That's why you see that big upward trend right there towards the end of the day. Okay. So it's due for a recovery. Just be mindful, where is the recovery headed? Very similar to what Meta did. Right? Remember when Meta did a big recovery off the lows? Bam. You can take that back up, right? But still remember that the pressure is still on the downside until it's not. So Apple could pop back up in this neckline. It's got to have a big overshoot all the way back up to here, right? Because there's the moving average, right? So that is even possible. Apple could come all the way back up to 270 right there. That is a very much possibility to go from this moving average. Again, you can trade the moving averages back up. So if it holds back above this 200 moving average here, or excuse me, 100, there's room all the way back up to 270 like that. But look, you see that lower high, right? So we need to reclaim and get back above. So that's an awesome trade, right? So consider that Apple might be a little bit ready for a recovery. Okay. It's warranted. Okay. So take your trade back up if you consider it with Apple, but watch where you're taking it to 265 and then ultimately 270. Watch this cross moving average stack here, because if we do this, there's a possibility that we can do that. It's happened many a times. Okay. So just preparing you, just so you know what to expect, because a lot of people are wondering like where things are headed. You have to take it level to level. All right. So Apple's in support. If we zoom out a little bit here, you can see right there, that's that previous high, retesting it right here. It's warranted to go higher. It's on a weekly moving average there. Right. But Apple can pull back deeper once it recovers off of the lows. All right. Netflix sitting on the weekly, not a very strong candle there, but it is at our level. Okay. It is starting to try to base a little bit that 89 to 90, but need to see a little bit more strength off of there. So Netflix, definitely an opportunity there. Just making sure I didn't miss anything. There's so many that I could go over, but maybe put it down below. I think I've mentioned most of them. I always got to mention SoFi because I know people are wondering where that's going. All right. Again, nothing happening on SoFi other than it's back above the moving average stacks here. Daily 20 holding, building, gets back above that 28. Maybe we can start building higher again. Back above that 28, headed back to 30. So it's just, again, consolidating up until earnings, maybe building some strength. Earnings report should be pretty good. But again, does that look promising right now? Not necessarily. It's just holding, waiting for the earnings. All right, just holding, waiting for the earnings. All right, folks, I think I've mentioned most of the things to prepare for tomorrow, and also give you some honorable mentions on respective stocks that you may be looking at. Put it down below, any stocks that you may need to cover for the next video, maybe oddballs, things you're looking for long-term, but consumer discretionary is running, okay? So one last honorable mention, Kava's. Beautiful there. Consumer discretionary, Kava, CMG, okay, Chipotle. If you look at Lulu, everything coming off the holidays, and then also we've got Amazon obviously is in there, so that's running. So anything spending, consumer discretionary, consumer spending, people are spending some money. All right. So peace, love, and blessings. Talk to y'all soon. Click the links down below. Make sure you join in, because that code that will be down below is going to be expiring on the 12th. So if you're new, please join our newsletter. No strings attached. Would love to have you inside. Learn more about us. Message our support team. We'll see you in the next video. Talk to y'all soon. Bye.